Turkish Lira / Norwegian Krone. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go here, Forex, Arabic and African bases. So here it is, Turkish Lira, Norwegian Krone. Basically after the 52-week lows, and around 29% here away from the 52-week highs. So if we look here at the charts, then we see clearly that it's been a very aggressive downtrend here for the Turkish lira. I did find some time cycles: rise, decline, rise, decline, rise, decline, rise, decline, rise, decline. And they have been relatively consistent. If we do look at some of the rallies we have seen, they can be significant. This is approaching 30%, and this is the Forex market. Those are very, very big moves in Forex. Here, all of a sudden, we got, approaching a 15% rally. From this low here to this high, 57%, which is huge in Forex. So it's very important to be aware of the context here, and you can get some very significant leverage as well in Forex. So the moves can become very, very big. So we recently made a new all-time low here for this pair. It's been extremely bearish. Though the time cycle suggested that there could be a bit of a rally phase around the corner here for Turkey. So that's interesting. Well, for the Turkish lira, that is. But the primary trend is obviously, long-term to the downside. Looking here at the daily data points, we are literally below all the key moving averages. It's been ferociously bearish. If you look at these other indicators here, and we zoom back a bit, then you can see. So when we look here at the RSI, the previous time we were at the current level, it did form a temporary low. Here, it did form, well, we went a bit lower, but then it formed a key low and we got a major rally. So you see that there's been multiple times here in the past where the current level has resulted at least in a bounce for the Turkish lira. When we look at the distance between price and the purple 20-week moving average, green 50-week, blue 100-week, and the red 200-week moving average, the current readings have formed very temporary lows in the past, which has been beneficial for the bulls. But, the big picture is obviously still to the downside. Going to the daily data points, we see something rather similar. Looking at the distance between the 20-day, 50-day, 100, and the 200-day moving average and price. Also looking here at the RSI. The previous time we were at this level, a little bit lower, it did form a very, very key low. So from a contrarian perspective, this looks interesting. It just does. There could be some bullish opportunities here, though in all likelihood it's going to be temporarily bullish within a major downtrend. Looking here at the correlations. So long-term weekly data points, we have a minus 93% negative correlation with the S&P 500. 33% positive here with the Turkey ETF. This is the Turkey stock market ETF. And the minus 53% negative correlation with the Norwegian stock market ETF. Then 85% positive here actually with the dollar index. Looking shorter term, daily data points, minus 22% negative with the S&P 500. 56% positive with the Turkey stock market ETF, then 84% negative correlation, so pretty, firmly negative here with the Norwegian stock market ETF. Okay, so the dollar index basically has no correlation here shorter term. So definitely some very interesting correlations. I do fully understand that some of you find statistical correlations to be boring, but it is actually one of the most important things to look at when considering any kind of investment. It's a huge deal. Statistical correlations is one of the most scientific studies you can do on any security. So here we have the weekly data points, and let's look at some correlations here and investigate further to make some kind of to get a hint about what could happen price-wise. So you do see that there is a strong positive correlation here with the dollar index. Hence, it could be especially interesting to know what is likely to happen here with the dollar. So let's look at the seasonality here for the US dollar. And we do see that November has a tendency to be strong, but December is weak. So that's interesting here, given that there's a strong positive correlation here long term. When we go here to the daily data points, so now we are more in the shorter term correlations, we did see that there's a strong negative correlation here with this pair and the Norwegian stock market ETF. So they do move a bit opposite each other. So now let's then look at the seasonality of the Norway stock market ETF. And then when we look at the last 12 years, you do see here that November, it is the weakest month. So that's quite relevant. But then you see that December is one of the strongest months. So given then, that, okay, so November is weak, December is strong. So it could actually be then that, the weakness that we tend to see in the Norwegian stock market in November, that could then in turn be beneficial here for Turkey because of this negative correlation, because an 84% negative correlation means that when the Turkish Lira strengthens, it goes up, you usually see the opposite here for the Norwegian stock market ETF. So yeah, November here looks quite interesting then for, so it corroborates the idea that you could see some temporary bounce here in the Turkish Lira. So yeah, that would be a possible trade. Interesting. As always, you want to let the trend be your friend and definitively respect that the major long-term trend is definitively to the downside here for Turkish Lira.